What happens when the world's fastest growing major economy runs into a tariff wall? Because if Trump's tariffs tighten again, India faces a brutal question: can it keep growing while its biggest export market gets more expensive overnight? And the real twist is this: India doesn't need exports the way some Asian economies do, but the parts of India that do rely on the US are exactly the high-value sectors India wants to scale next. Let's break it down. I'm Imran. And the big question is Trump's tariff pressure a real threat to India's growth story, or just a speed bump? First, the baseline reality. The US is one of India's most important trade partners. In 2024, US goods imports from India were roughly in the high 80 billions range. That's not small, and when tariffs rise, the pain doesn't hit India evenly. It hits specific export engines: pharmaceuticals, textiles, auto components, electronics, engineering goods, and gems and jewelry. Now, what do tariffs actually do? They don't ban trade. They tax it. So the immediate effect is pricing. Indian exporters either raise prices and risk losing customers, or cut margins and risk profits. But the second effect is more structural. Tariffs push global buyers to reroute supply chains. They start asking, can I source this from Vietnam, Mexico, or somewhere inside a friendlier trade lane? That's where the risk sits, not in one bad quarter, but in losing future contracts. Okay, so why might India still keep growing? Because India's growth has increasingly been driven by domestic demand, public investment, and services, not only by shipping containers to the West. Even with export headwinds, India can still expand through infrastructure spending, consumption, digital services exports, and manufacturing aimed at its own market. And growth forecasts still reflect that confidence. Many institutions still place India's medium-term growth above most major economies, even while warning about external shocks. So, if India can grow anyway, what's the real vulnerability? It's not India collapses. It's India's upgrade path slows. Here's what I mean. India is trying to climb from low-cost manufacturing to high-value manufacturing. Electronics, semiconductors, advanced chemicals, defense production, and EV supply chains. Those sectors are capital-intensive. They need predictable market access, especially to the US. If tariffs create uncertainty, investors don't always leave, but they delay, they diversify, and they negotiate harder. So the tariff risk becomes a confidence tax. Now zoom out to strategy. India has 3 levers. Lever 1, deal making. India can cut targeted tariffs, expand purchases of US energy or defense equipment, and negotiate carve-outs or quota-style relief, basically buying stability. Lever 2, diversification. India pushes harder into the EU, Gulf, ASEAN, Africa, spreading export exposure so Washington can't be a single point of failure. Lever 3, move up the value chain faster. If you sell products with less price sensitivity, specialized pharma, engineered components, high-skill services, tariffs sting less because buyers can't easily replace you. Now the threat to India question becomes, can India execute all 3 at once? And the threat to the US angle is also real. If tariffs slow India's rise, Washington risks undercutting a partner it wants as a counterweight in Asia, while pushing companies into complicated rerouting instead of real reshoring. So here's my bottom line. Yes, Trump tariffs can slow India at the margins, especially in export-heavy sectors. But India can still grow if domestic investment stays strong and if it keeps pulling supply chains into China +1 manufacturing. The real danger isn't recession. The real danger is lost momentum in the upgrade race, the part of India's story that turns growth into global power. If you want, I can do a follow-up video. Which Indian sectors are most exposed to US tariffs and which actually benefit? Drop a comment. Do you think India can outgrow tariff pressure, or does the export engine eventually hit a ceiling? And if you like these calm, fast breakdowns, like, subscribe, and share.